Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I've got two paper money trades for you today on two high-profile names. We'll look at Apple and we'll look at Meta Platforms, two of the biggest percentage movers this morning. Now, the markets have moved incredibly just in the last half hour, so some of these numbers may change a bit, but the strategies is what is most important to focus on today. So let's get to our first one, and that is Apple. Now, Apple has been moving a lot all over the board. You know, it was as high as 260. This morning, it was as low as $174, now trading around $183 as we get to 9:30 in Chicago. Let's look at the diagonal, the call diagonal. We looked at keeping our dates very tight to minimize the Vega exposure that we have, because volatilities are high. They could possibly be coming down if the market were to recover here or bottom out. So you have to always be cognizant of the implied volatility that you're buying and selling. So I looked at the April 25th, 2 weeks out, and then looked at the April 11th. So buying the April 25th 180 call, selling the April 11th 195 call. Now you look at the move for this week in the April 11th, it's about $18. Implied volatilities are extremely high, therefore the moves are getting higher. Now that allows you to do one of two things when implied volatilities are higher and the moves, the expected moves are higher. You can move your strike out further, or you can take the larger premium on the options that you're selling at a reasonable rate. So what I did here is I looked at an $18 move, and I looked at I'm buying the 180 call, selling the 195 call. So I put that in about $7.67. It's trading $9.60 now. So that's how much these spreads have moved since a half hour ago, frankly. So that would be one way to look at this. We're in moving, busy, dynamic markets, so you certainly want to pay attention to where the strikes are right now as the markets move. So, but the good news is the risk on the trade is the debit paid, and you're looking for a move to whatever that short strike is. The spread we have on right now, you'd be looking for a move towards the 195 strike. If you adjust your strikes, you get the idea. You're buying something at the money 2 weeks out, selling something this week about in line with the expected move. Okay, let's get to our second trade of the day, and that is Meta Platforms. Again, Meta Platforms this morning traded as low as $481, now trading $506. Does that mean you want to adjust your strikes? Possibly. What we looked at in the call diagonal today is the 500, 530 call vertical. Pretty much in line with where everything's trading, but it probably has moved up. We put it in 2150. It's trading 2390, so almost $2.50 higher than where we put it in only a short period ago. Now, buying the 500 strike, selling the 530 strike, that's a $30 call diagonal. Buying April 25th, selling April 11th. It's a $30 call diagonal. It's collecting theta. The risk on the trade, remember, theta, Meta is a $500 stock, so it's not a lower premium name. It's a larger premium name. Therefore, the debits you're going to pay are a little bit steeper. So the 500, 530 call diagonal trading around it's $24 basically right now. But again, the stocks are moving all over the place. Do you want to move that up? Remember, the expected move for this week at Meta Platforms, around $48 is where it sits right now. That's what you need to look at here for the scenario where we find ourselves. Now, again, I want to state, the risk is the debit paid, and your target is the short strike. You want to move up this week towards the short strike. Your long deltas, you're collecting theta on these trades. All right, good luck out there. That's our show for today. I'll see you tomorrow with another edition of the Daily Trader. I'm Kevin Hincks.